the candlestick patterns. Many of you would have gone through those candlestick patterns. It is very easier concept. Little bit of understanding and little bit of concentration is required to master this particular techniques. These candlestick patterns are highly reliable in intraday trade. However, it has a very moderate success once you take those studies for granted in weekly or monthly trend forecast. However, intraday, its accuracy level is quite high. It maintains above 70% accuracy and it is very easy concept. So in candlestick, whenever we are talking about the candlestick, this is a chart pattern. So here what happens, when graph is being drawn on your price time chart like a candle. So here what happens, this is the upper wick of the candle, lower wick of the candle, and this is the body of the candle. So this kind of one chart is being drawn. So whenever there is a uptrend, the candle color used to be blue or white. Whenever there will be a downtrend, the candle color will be red or black. So these are the coloring combinations the different charting softwares utilize. And here this upper wick of this candle, it is high, and this is the body of the candle, and this is low, and this is the highest of the candle, and this is the open of the candle, and this is the close of the candle. Open, close, high and low. So this is how the candles is being formed. So whenever the close will be low itself, so no lower wick. Whenever the open itself is high, there will not be any upper wick. Sometimes you can say between the open and close itself, very small difference will be there, so body will be small. So like this way, different configuration it used to form. So if you see those candle patterns without upper wick, without lower wick, with a small body or virtually no body at all, which is known as a doji line. So like this way, if you see different type of candle, we used to find out some 11 candles, 11 different candles you can find out. So means some will have body, some will not have the body, some will have the body with a smaller length, some will have not have upper wick, some will not have lower wick. So like this way, if 11 different candles we can say, and we have named it also. Someone is doji star, someone says that hammer, inverted hammer, so star. So like this way we have formed different candle names we have given. So now coming to the pattern. Whenever we talk about the pattern is the combination of two or more candles. So it is not a single candle. The combination of two or more candles is known as the candlestick pattern. So in this particular study, 180 candle patterns are available. So this 180 candle patterns always guide you for deriving specific trade decisions. So broadly today we will be learning some 6 different patterns: engulfing, bullish and bearish, dark cloud cover, bullish and bearish, morning star and evening star. So this is morning star is for a bullish pattern, bearish is a bearish pattern. So like this way you have couple of trend candlestick pattern, which is trend continuation candlestick pattern, couple of candlestick pattern and trend reversal pattern. So these are also same group of trend continuation, trend reversal is there. So till this point, whatever I have told now, it is quite general or quite easy concept. But post this, your real candlesticks learning starts. So here what happens, whenever we talk about the pattern, as I said to you, it is a combination of two or more candles. So for example, you can take that bullish engulfing pattern. It says that one black body means it is a falling day, and there is followed with one white body or it is a blue body, and this black body totally engulf in the white body, means the falling day whatever the price action it has taken place. In falling day, whatever the price action has taken place. In rising day, that action is completely within this. Means this high is higher than this high. This low also is lower than the previous day's low. So, and body of the candle also, the opening and closing basis also, body of the candle also bigger than the previous day's body. So, whenever we talk in terms of day, so previous day, previous things we can say. Whenever we talk in the 5 minute, 2 minute, 3 minute, like this order, so we can also understand that order. However, one very important component of this candlestick pattern, which often ignored by the traders. We just look into this bullish engulfing pattern. We said that it is a bullish engulfing pattern, so enter a trade. However, it has a very fine-tuned mathematics behind it. So whenever we look into any pattern, we need to see what? We have to find out when this pattern will give you a breakout. If it gives a breakout, then we have to find out a target. So when this pattern also will give a failure, and what will be the volume actions that time, because candlestick pattern is always trustworthy whenever it will be validated with some volume. Without the validation of the volume, the candlestick pattern is not trustworthy. So this is how we can we can understand this particular candlestick pattern. So candlestick pattern must be validated with these three factors: pattern breakout, target identification points, pattern failure, and volume action. So any candlestick pattern you take, these four components you must know. Then only you can trust on that, or else that pattern may not be trustworthy. So when we talk about this pattern breakout, target identification, pattern failure, so here also Fibonacci plays a very vital role. Fibonacci principle plays a very important and vital role in this particular candlestick patterns. Now also you can get many candlestick patterns. In the NSE site itself you have lot of patterns you can get it. However, pattern breakout is the core of this candlestick pattern. Any candlestick pattern you learn, you must ask yourself when the pattern is going to give me a breakout, when this pattern is going to give me a failure. These two things is highly essential. And tomorrow we are going to learn about Fibonacci study. Two important sessions is there for the Fibonacci study. Tomorrow we are going to learn the very basic concept of Fibonacci study, its processes, and day after tomorrow we are going to learn the use of Fibonacci for making long-term trade decisions like for BTST or short-term trade decisions. So that part also we are going to learn. So using the Fibonacci for intraday, I have taken enough, and I will also take enough in the third week of the event. So this is the second week of the event you are experiencing. So third week also lot more concepts I will be taking on the GANs concept, also lot more things you will be learning. So if you have not registered for this third week event, you feel free to join that and register yourself for the third and fourth week. So now pattern breakout in the bullish engulfing pattern. Second day's high added with the 786 retracement of the second day's high and low range. 5786. Why not 0.618? Why not 0.5? Why not 0.236? Because 0.618 to 0.786 retracement is considered as your death zone. So this is also I have earlier told in many occasions. This 0.618 to 0.786 is known as your death zone. So whenever we are talking about this death zone, so that death zone is very important for a trend breakout. So what I have told here, second day's high, this is the bullish engulfing pattern we are learning. Second day's high, this is the high, and you have closed here. This is the open, low and close. So closing is higher than the open. So this candle will be a blue color candle, or it is a white color candle. So whatever the color combination you are giving in your charting software, so that you can look into. But this is the common thing. So tomorrow you have to take this high into thing. If this is X, what is the body of this candle? High to low, what is the range it has given? So high to low, what is the range it has given? You have to take 0.786. Why 0.786? Because 0.786 known as your death zone. Whenever price crosses over 0.786 retracement, then you have a maximum chances to penetrate a higher level. And that is a fact. That is a fact, proven fact. So that is not a hidden fact. I will show you one very great example today. Many of you, those who are registered in our site and those who are going through this weekly newsletter of the Nifty future movement, Nifty future movement, those following us in this, you can say in our Facebook or Twitter, this is the last week's level I have given. Look into this factor. Look into this factor of 786, which is 8,100. So you had a great opening. It has taken above that. Then this is the death zone has penetrated. If you look into these two price points, 80742, 8102, how much resistance you have found in this week in the Nifty future? And you look into once this is crossed over till 8174, how much resistance you have found out? Today though you have just closed above that. So this is how till you are inside the death zone, which is 0.6182 to 0.786 zone, you have the maximum chances of a trend reversal. Though it is an uptrend, but that trend cannot be trusted, it may reverse. So for that reason, here in bullish engulfing pattern or in the bearish engulfing pattern, in both the cases, what I have just told you here, the last high whatever is being recorded in the second candle, so that high must be added with 0.786 retracement of the price range given by this candle. So whenever you are taking a 5-minute candle, 10-minute candle, 1-minute candle, you follow the same rule and it works nicely. So once this breakout is being given, so where will be your target? So once this breakout is being given, then you have to go for a target identification. That too also I have taken with the Fibonacci rule. So most of the candle pattern breakouts and candle patterns target points you can find out in my book. Many of the books, those who have been written on the candlestick pattern, though they have nicely narrated many patterns, nicely explained those patterns, but many has not utilized the Fibonacci into it. So this is my own introductions of Fibonacci into the candlestick pattern. So this is the thing you can say I have infused the concept of Fibonacci into that. Once this is being done, then you have to target will be 1.236 times of, so same ratio, and it has an expanded target till 1.618. When this pattern is failure, suppose you have this bullish engulfing pattern has formed, one first day candle is there, and you are having a second day candle here which totally engulfs the first day's candle. So this total engulfs the pattern things. Suppose you can say it has not given you any breakout, means 0.786 above it has not taken you, and same time also you are not getting any chances to purchase. So when you should think that this pattern has failed, so you have to say the second day's low, which is here, minus 0.786 times of your day to high to low range of the second day. Then only this pattern will fall. Till the price is moving in this band, the second day's price band, in the second day, whatever the price does form, till the price is moving in this particular band of high and low of the bullish engulfing patterns second day, you can say you are just consolidating. You can say just you are consolidating. You have not given any failure in the pattern. And this failure happens whenever you fall in the opposite side's death zone. And what is the volume action? So that is also very, very important. As I told you, without looking into the volume action, many of the candlestick pattern study never completes, or those study is still considered as a wrong study if you do not look into the volume part. What happens in this? Whatever the volumes priorly it has formed, same volume it may maintain in this engulfing formation time. Once the pattern is breakout, it is given, pattern given say breakout, that time you will find out a definitely rise in the volume. When the engulfing pattern gives you a breakout, volume rises. And one more contrasting view also there. When engulfing pattern is giving a failure, volume decreases. That is also a part very carefully you have to understand. So, and this factor of volume action is being documented in most of the books which is written on this particular candlestick subject. Same way, bearish engulfing pattern. Bearish engulfing pattern says a different story. So it has a green day or closing is higher than the opening. So that is green day. Then it is followed with a black day or a red day where the closing is lower than the opening, and the low of the second day is lower as compared to the first day, and the high of the second day is higher as compared to the previous day. So same logic you can take in the 5-minute chart, or you can take it in the 1-minute chart also. Once you can get these factors, you have to again use the same Fibonacci rule for finding out your pattern breakout point, target identification, and pattern failure. I'll show you some more things on this particular candlestick also. So I'll show you some more things, some more interesting feature of this candlestick pattern also. If you are accessing, you have in the future and options, cash also you can see. So here many patterns that they have given: dragonfly doji pattern, dark cloud cover, hammer. So bullish engulfing, bearish engulfing, but what you have learned now. So if I can just take it out those things, you can see whether this pattern has formed. This pattern has formed. So if I take it out that things, so you can get it here. Bearish engulfing has formed, that's it. So similar way you can find out whenever this patterns has formed. So here, so bullish engulfing pattern is formed. So not necessarily that previous candle is this one, this is the current candle. So you can see, so one flag they can put it here. So bearish engulfing pattern, bullish engulfing pattern. So they will give you the patterns. Now it is your duty to estimate those levels. So if you are learning all those patterns, don't think that I cannot able to use it. So you have many patterns here, just you have to select it: morning star, evening star, what I am going to tell you. So all these patterns, many important patterns, though it is not 180 patterns they have given, but very good patterns. Whatever the necessary patterns they have already given, just give a click here, you will know that what kind of pattern has formed here. So then you just focus your pointer here, you will come to know about this thing. Once you know this pattern, now your real study starts. What I should do, I knew that yes, bullish engulfing pattern has happened. So once you learn this concept, yes, bullish engulfing pattern has formed. When the pattern is going to give me the breakout, when this pattern is going to give me a failure, what is the volume actions of these patterns. So all those things. So if you can see, the volume actions also is coming here. So here also you are getting the lower part of this scale, you are getting the volume actions. So this is the volume actions you are getting. So volume actions also you can get. So you don't require any sophisticated software for that. If you do not have a software, still you can utilize these things in a great way. Now informations what I'm getting from the NSE site on patterns is a forward indicator or a trailing indicator. So those who have told that it is a trailing indicator, they are correct. They are correct because one event is already happened. Whenever we talk about a trailing indicator and a forward indicator, what is the exact meaning? One event is already occurred. So this patterns is not given to you beforehand. Before the price is plotted in the screen, this pattern is not given to you. Pattern is given to you once one occurrence has happened for 5 minutes. This is the price action for the trailing 5 minutes forwarded with its previous 2 or more candles they have taken into reference and given you the as per that pattern's requirement and given you the pattern. So it is a trailing indicator. The patterns what you are observing now is a trailing indicator. It is not a forward indicator because the prices what is being taken for identifying this particular indicator is trailing in nature. So what we are our study, smart finance study, is different. How we are differently treating this particular candlestick pattern. We are introducing a concept of Fibonacci into it. We are saying that yes, this is the pattern happened, and based on this pattern of bullish engulfing, the second candle's high added with 0.786 times of second candle's body is your breakout. This is that breakout will form a different candle. That breakout will form a different candle. We are not worried about that. That is going to, if that next price move, whatever candle it forms, but if that next price move is giving me this level, what is that second candle bullish engulfing second candle's high added with what is the high and low range multiplied with 0.786 retracement. If that I get, then it is a breakout. So by introducing the concept of your Fibonacci into these patterns, by introducing this target identification with the Fibonacci proportion with this particular candlestick patterns, by introducing this pattern failure points in this, you can make it as a forward indicator. So you must say that bullish engulfing has given in the trailing whether I should buy. If you buy that, that doesn't mean that it won't give you failure. It's means you can translate that things in bullish engulfing. As per the past data, it has formed. It is good. We are not denying that it has not formed. Once it gives you a breakout, that breakout action may cause some other patterns to form or other candles to form. But once it gives a breakout, then only you can have some expectation of a move. And once this target is reached, another one beautiful thing about this particular pattern study of your candles, once this target is reached, suppose this is ultimate target we are giving for 1.236 retracement. Till what point this, whether from there another one bearish engulfing will start or prices will fall after reaching that, may not be. The candlestick says once one bullish pattern, any bullish pattern, listen to very carefully to this part. This will help you a lot in learning those pattern studies. Bullish candlestick pattern, whenever it gives you a breakout and achieves a target as per the Fibonacci proportion, these targets will expand or that same trend will continue until any other bearish pattern is not formed. This target, after achieving the optimum target, it will not halt there. It may continue with the same trend until and unless it has not formed any bearish candle pattern. Once it forms any bearish candle pattern, that time you can say that yes, it is right, the trend is saturated, trend is over, trend is going to move in an opposite direction. Till that point it will move. So this is the only one study which It's an open-end study, which is not at all a closed-end study, which is an open-end study, wherein it says that if one bullish candle pattern gives you a confirmation or breakout, and post breakout it achieves its optimum target as per the Fibonacci proportion, then that same process continues till it has not formed a bearish pattern. This is the only one most beautiful part of your candlestick studies. Same way you have bearish pattern also I told. Now moving to the next pattern. So moving to the next pattern, which is bullish dark cloud cover and bearish dark cloud cover. So here what happens? You have a long black day or red day. There is a gap down opening, but closing will be higher than the opening, so it will be blue day. So this is bullish dark cloud cover. Same other way is bearish dark cloud cover. First day will be a closing will be higher than the opening, so it will be a positive day. Next day there will be a gap of opening, however the closing will be lower than the means negative closing will be there, but that closing should be within the body of the first day or the first candle, then it is called as a bearish dark cloud cover and bullish dark cloud cover. So these two also having a specific rule: pattern breakout, first day's high plus difference between the first day's high and the second day's close. So this is the arithmetic of pattern breakout in bullish dark cloud cover. Target identification, it is unlimited till any bearish candle pattern is not formed. Pattern failure, if the price moves below the second day's low and close slightly above the opening, then we can say that this pattern has failed. Or any, you can say any star formation, inverted hammer formation, then also pattern is a failure. Third candle. Bearish dark cloud cover also having the same rule, first day's low. This is your first day. So this is your first day. First day's low. So this is the low. So plus difference between the first day's close and second day's close. First day's close and second day's close. So you have closed here second day here. So and here is the first day's close. So difference you have to take, and that difference you have to add. That is your pattern breakout. So bearish dark cloud cover gives you a trend. It is a trend reversal pattern. It will bearish dark cloud cover is a trend reversal pattern which will give you that future trend will be bullish, and bullish dark cloud cover is a means trend reversal pattern. It will say that future trend will be down. So this is how we can treat this particular two things. So this is how pattern failure also you have. And similar way also we have the candles morning star and evening star. Three candles are being utilized. One black day followed with one gap down, and this color of whatever may be the closing. So this is not important, but the next candle should be a gap down, then followed with one gap off. So this is a very volatile pattern, and this is a very frequent pattern also. So gap off and close as a positive day, and it should be within the first day's body. So this is morning star pattern. Similar way evening star pattern also is there. So morning star pattern is a bearish trend reversal pattern, means from bearish to bullish you can move. Evening star, from bullish to bearish you can come. So this is also a trend reversal pattern. So this is how you should learn these patterns. And here also morning star and evening star having a great Fibonacci relationship, and the distance between this gap also is very important. The gap must be breached in the whatever the gap is being created here by the second candle. The third candle must breach the entire gap, then only it will be called as a morning star. So if the gap is 20 point, the third candle must breach that 20 point, then only we can say it is a morning star pattern. So once this bridging action happens, then we have to take a cognizance from the Fibonacci proportion. So Fibonacci proportion whenever we are taking, so breakout we have to take from the high, whatever high it has created in the past, day. So here again same 0.786 retracement we have to take based on the body of this second day. So what is the body it has given in the third day? So that body is 786 retracement we have to add, so it will give the breakout. So this is how we should learn the morning star pattern, evening star pattern. So identifying the pattern is not a great job because you are already having the softwares available in the NSE site which can give you that patterns identified for you. So just you have to select the instrument and just select the patterns and just click the things, it will give you the pattern. And post identifying the pattern, your job is to find out the breakouts, targets, failure points of pattern and the volume actions. These four things you have to count. So this is how you should translate the analysis volume 2. These two books I have covered most of the important candlestick patterns, not all 180 patterns. You will get more on these things, only couple of things I have taken. So this is how our materials are different from the others. Here we have a thorough research process we have done, and it is, though this time I am presenting before you all these literatures we have brought 10 years back, and a lot more, many changes also we have brought in the due course of time. So similar way we have this 10 different variety of products which is flagging on your screen, and those who are taking at with this real-time software all these courses, then it costs 17,500 and individual price tags is available here. Any sales related query you can call in this below number 98403 and most of these books are, you can read a part of that book from our website also. If you just go to Smart Finance website, our website, under the books link, if you go, what is there in that book, technical analysis volume 1, volume 2, this books is there. So you can read a part of this book, some 20 to 25% of the books you can able to read here. So it is in the Google books we have put it, so you can read what is the content of that book, what are the, only a part of that things you can able to learn, read, not all. So 20 to 25% of the book is in readable form also, it has been given, so you can read it also. So this is about live bearish engulfing pattern has formed. So low is 8185, high is 8193, 81932, 8185. So just give me this engulfing pattern you are seeing on the NSE Nifty future chart which has happened around 1 o'clock 30 minutes. So high was 8193, 8193 I can say, low was 8185. So the difference is 8 points, 0.786 I will take it, and this is 6 points it is coming. So my low is 8185 minus 8185. Once it goes, I can say 8178 below I can think of selling, 8178 below I can think of selling, 8179. So from here we are just, if you just look into these particular things, 8179 below, based on this pattern, 8179 below you can sell. So here 6 point is coming, 6 into 1.236 retracement, 6 into 1.236. So if you can take some 7 points if you are taking from here. So once this breakout has given, so 8179 you can decode. So 81 till 8171 you can get it, the first thing. So this is the breakout it has given. So next candle's low we can come to know. So here is the happened, low is 86, it has closed it here. So if you can see here till 8183 it has come, never given a breakout. Here also it has never given a breakout. 779 has not come, it has not given the breakout. So this pattern converted to a failure here. it has come to 79, then here to 78. So and low as also 78 it has come. So here next part of the things it has not worked out, it has given a absolute failure, it has converted here when it has gone to 8202 level. So it has converted to a failure also here. So pattern, if you intraday it works, but once that pattern forms, it has not given the breakout. Next 5 minutes, it is a 5-minute candle. Next 5 minutes, you have not got a breakout in this pattern. So it's a 5-minute chart. Next 5 minutes, since you have not get a breakout in the downside, so you can consider that this pattern may convert it to a failure. And one more also it has formed here. So here also doji star, here bullish engulfing has formed, and this could have given a great success. High it was 8195 and 80. So 15 points, 15 points is the body. So on 15 point 0.786 you have to take, add it with this 8195. So you can say 8206 you are expecting here. So 8206, beyond only it will be giving you the breakout. So it didn't happen, 8202 level it has given. So 8207 to 6.79 it should have given a breakout.